Good afternoon, everyone. It's Coram and Shreve here with the breakdown of the action for Wednesday, January 17th, where we saw losses across the board for the major indexes, but into the close, Ken, we did see a recovery off of those lows.
Yeah, we like those. We like those butts, Ali. Yeah, this is Nasdaq. I think at one point was off 1.6% intraday. To see it close down 0.5%, 0.6% in that area, pretty impressive. But as usual, lots of stocks out there acting well. Want to talk about a retailer, Burlington Stores, and then two stocks showing pretty good action around their 10-week moving average: Axon Enterprise and also QLYS in the security software group.
All right, looking forward to getting your take on those three watch list stocks, and we will do that. But first, let's take a look at the major indexes. As you mentioned, Ken, the Nasdaq down at 0.6% today. Same for the S&P 500. The Dow down 0.25% on the day, and the Russell 2000 down a little less than 0.9%. So we did get that recovery off lows at a key level on this chart here for the tech-heavy index.
Yeah, I thought it was a fairly constructive close yesterday for the Nasdaq. The percentage decline was not enough to qualify as a distribution day, but fairly orderly decline yesterday. And then today, like I said, the composite was down as much as 1.6% intraday, and it closes up near its session high. So all it looks like to me is just a test of some combined short-term support levels here. The 10-day and the 21-day moving average still holding near highs, and we'll see. After we'll see if 15,000 ends up being a resistance level here, because we've been saying that since that late October, early November rally, the longest losing streak the Nasdaq had during that time was 2 sessions. So there was a big move up from the bottom without a whole lot of consolidation. So we could see a test of the 50-day moving average here down the line, but overall, market fundamentals seem to be pretty good.
Yeah, I'd have to agree with you, Ken. Let's take a look at the S&P 500 as well, showing a similar view, finding support at that 21-day line. So as of now, as we do start to get a little bit more of this sideways digestion, we have key levels on both the upside and downside that we're keeping a close watch on.
Yeah, definitely. And really kind of a similar look to the NASDAQ here. Test of the 21-day line. These moving averages aren't quite converged like they are on the NASDAQ, but just a nice test of short-term support levels. But the S&P 500, just like the NASDAQ, is dealing with a round number here it needs to get through. It's tried a couple times to poke through 4,800, but having some difficulty. So again, by the scope of the market's gains since late October, early November, possible we could see a test of the 10-week moving average here on the weekly chart for the S&P 500, or a test of the 50-day on the daily chart. So we'll have to see.
Yeah, we will. And let's take a look at the Dow here, holding above its 10-week line, coming in a little bit. A closer look at the daily chart shows some support at the 21-day line here for blue chip stocks as well. And just to reiterate, as you said, Ken, with those explosive moves in the last 2 months of 2023, it makes sense to get some sideways action or a little bit of digestion as 2024 gets underway.
Yeah, no doubt about it. And again, against this backdrop where we've got the major stock indexes holding near, short-term support levels and still showing, underlying, strength, we've got, a lot of good action in individual stocks. So it's not like we're seeing, sell signals among leading stocks being triggered left and right. We, raised a little bit of cash in the leaderboard model portfolio today, but we went from basically 95% invested down to 85% invested. So we still have pretty good exposure here.
Exactly. Yeah. Because these digestions, they can create add-on entries with pullbacks and bounces. I know we're going to be taking a look at some setups here shortly, and also new bases to form. So having a market pause is helpful for that. One sticking point still, though, Ken, is the small cap area of the market. Here's a look at the Russell 2000. Hit the hardest today. It did close off of its lows as well, though, but seeing a bit more of a pronounced retracement after that strong year end. for small
Yeah,
caps.
this is a pretty violent pullback too. You can see that initial drop below the 2000 level was pretty extreme for the Russell 2000. So you look at the weekly chart here, and again, these daily and weekly charts provide good perspective because the Russell on the weekly is just really a test of the 10-week moving average going on right now. So this market can hold itself together. I'd like to see this weekly bar. It could be a red bar, but if we get a close up near it, its high, maybe just a modest weekly decline or even a nice blue up week after after a soft start to the week this week, that would be making a pretty good case for support here for the Russell 2000. But still looks like a test going on right now, and like the market, it closed up off its nicely up off its lows as well.
Yeah, we'll take it. And let's take a look at the 10-year yield because we are continuing to see more economic headlines roll in and some readjustments of the Fed rate cut odds for this year.
Yeah, this is a bit, still an issue for the market. When the Nasdaq was down 1.6%, or major indexes were under, pretty heavy selling pressure earlier, you had the 10-year yield was up sharply, and you can see it still closed decently higher today. But you also have, the U.S. dollar that has been strengthening as well. So you can see the UUP closed off its highs, but it's been a pretty strong rally over that 27 level. So if the dollar continues to strengthen, we see these higher interest rates. That's typically not going to be a good recipe for stocks. I will say, if you go back to zero TNX, that the 50-day moving average, and this is just a price scale here. It looks like it's around 4.19%. So 10-year yield's about 8 basis points away from that. We would expect that this could be a little resistance level to watch. So if that yield gets up towards 4.19%, give or take, maybe we get some selling, and that could halt the recent uptrend here. But again, got to pay attention to rising bond yields and the strong dollar. We didn't talk about the retail sales data real quick. It was stronger than expected, and we've been getting a really steady supply of good jobs market data, good retail sales, personal income and spending. The weakness has been in manufacturing, but overall, economic data continues to be pretty strong. And if it continues to be strong, well, the Fed is not going to be in a position where they can
Right.
aggressively cut rates. In fact, they may have to, raise rates if the economy stays hot and growth stays strong. So these are some wild cards that the market is still trying to figure out here.
Yeah, absolutely. Well, speaking of retail, let's go to a retail stock. Here's Burlington Stores, BURL, up 1.3% on the day. A nice gap up on earnings in November with some strong earnings growth behind that move. And taking a look at the weekly chart, I can see some key levels that I'm sure you're watching, Ken.
Yeah, definitely. I mean, the stock really started to move when it reported earnings in November, and you can see the annual estimates here are very strong. This company, like a lot of others, has been trimming costs, so that's helping their bottom line. But you can see revenue growth for the October ended quarter accelerated nicely, up 12% versus 9%. So, if the market were really worried about a big slowdown this year, I think you see some of these retail stocks acting a lot weaker on the but what Burlington Stores is showing me is that it's holding gains after this earnings move in November, trading sideways. So we're going to watch, for continued sideways movement here, maybe even a first test of that 10-week moving average. If that happens, I think the stock would be in an alternate buy zone here.
Okay. And now let's take a look at AXON. Axon Enterprise, a former Taser, holding above its 10-week line. We still have plenty of time here before the next earnings report for Axon.
Yeah, relative strength line is still in good shape. Look at the top line growth this company has delivered for multiple quarters in a row. I mean, 30% plus. So there's fundamental story here. You've got big earnings growth in recent quarters, and again, they make the taser stun guns, and then the Axon body cameras that's used by a lot of police forces around the country. So this is just a perfect example of what an orderly pullback to the 10-week moving average looks like. So this stock looks like it's in a buy zone here. It initially broke out, had some good weekly. Good weekly volume behind the move, and it's just coming down gently and holding support here. So I think this name looks pretty solid.
Okay. So bounce in some volume would look good for this stock. So that's what we will continue to watch out for. And last but not least, let's take a quick look at QLYS. This is Qualys in the security software group, seeing some nice support here at the 50-day for this stock.
Yeah, and again, let's just go over to the weekly chart here, because this is where they're really, again, just what a good example of a first test of the 10-week moving average looks like. Last week, it rallied in higher weekly volume, continuing a trend of higher volume weekly gains here. So solid test of the 10-week moving average. Not a widely known name in the security software group. You tend to hear about, Palo Alto Networks and the Zscaler, CrowdStrike. Qualys is, not a well-known name, but a company that's been able to churn out very consistent growth and in a good technical setup here.
Yeah, in a good technical setup and in a really strong industry group, ranked number 2 out of the 197 groups that IBD tracks. So with these potential add-on entries, this is an area of focus, no doubt. Thank you so much, Ken. And thanks to everyone for tuning in. We'll be back with more tomorrow morning on IBD Live. So please join us 10 minutes before the opening bell, investors.com/IBD Live for all the details on that. We'll see you then. And then we'll also see you right back here tomorrow at the close.